ASML reported earnings recently. Even though they were profitable and beat analyst expectations in this huge semiconductor downturn they have seen since 2008, their stock still dropped more than 3%. So in today's video, I'll be doing a deep dive on ASML stock and possibly explain the reason as to this seemingly confusing drop in ASML stock. Advanced Semiconductor Materials Lithography, or ASML for short, is a semiconductor wafer fab equipment company with a focus in photolithography. Most notably, their equipment are DUV Deep Ultraviolet or EUV Extreme Ultraviolet machines. On top of that, they also have a very small stake in metrology equipment. DUV is used in the manufacturing of all memory and logic chips. EUV, on the other hand, is essential for producing products of 7nm techno and below. So for ASML, EUV accounts for roughly 50% of their sales every quarter, whereas for DUV accounts for roughly about 45 to 47% of their sales. The remaining 3% comes from metrology tool and equipment. Although the semiconductor wafer fab space has seen very fierce competition, with companies trying to one-up one another by providing better technology at lower costs, ASML do currently have the monopoly over deep ultraviolet UV technology, with one machine costing more than $300 million. And that's not all. Despite the high cost of producing UV machines, ASML currently have more orders than capacity due to the strong orders coming in from 2020 and has spilled over to 2023, as well as the difficulty in making these machines. We can also see that their largest customers come from both Taiwan and South Korea, most likely from TSMC and Samsung. Okay, jumping over to their Q1 2023 earnings call, we can see that their net sales sits at 6.7 billion euros, with a 51% gross margin and the net income at 2 billion euros. Both net sales and net income saw an increase quarter on quarter, which is an extremely good news coming out of a semiconductor company given that we are in a huge semiconductor downturn currently. This may seem very good, but if you were to take a closer look at net bookings, we can see that net bookings sits at a measly 3.7 billion euros, a sharp decrease from the previous quarter. Net bookings are like pre-orders where fabs will place their order for DUV or EUV machines and let ASML build these machines for them. During the 2020 semiconductor boom, both fabrication plants in the logic and memory space were very eager to expand their production capabilities and place a huge order on ASML, which caused ASML to have so much backlog and some of it spilling over to 2022 and even 2023. This drop in net bookings is probably also the reason why ASML stock dropped even though they beat earnings expectation. The net booking is the lowest that ASML has seen in many quarters and is probably also a signal of weakness in the semiconductor industry. More on this on the later part of this video. In the press release, ASML also mentioned that there are some mixed signals in the industry, with some customers delaying their demand timing while other customers absorb this change. Most notably, their memory customers are seeing a weakness due to the recent downturn in the memory market. However, this downturn has been picked up by DUV customers, which are operating in the more mature tech nodes and are able to cover this shortfall left by the memory players. Overall, their capacity is still fully booked for 2023 and even the first half of 2024, with capacity only opening up in the second half of 2024. Hence, the stock drop is probably nothing to worry about, as the semiconductor industry is expected to recover sometime in 2024, and we may not even see a drop in ASML's revenue during the largest semiconductor downturn since 2008. Currently, ASML mentioned that they will be focused on maximizing output, a very stark contrast to the tone by other semiconductor companies, in particular the wafer fabs such as Intel, Samsung, or even TSMC. Furthermore, net sales is expected to increase by 25% in 2023, and ASML is ahead of their declared capacity of 60 EUV units per year, having already sold 17 units of EUV in Q1 of 2023. Now, although this may not be the case going forward into the subsequent quarters, it is still a very good start for 2023. So to sum up, ASML has monopoly over one of the most profitable niche, namely EUV lithography, with each unit selling for hundreds of millions of dollars, and each unit being able to deliver a 50% gross margin for ASML. Not to mention that they delivered a net profit that even beat analyst expectations in one of the largest semiconductor downturn since 2008. So without a doubt, ASML is currently a very solid company from a fundamental perspective. However, before you rush off to buy ASML stock, let me present you some counter arguments against ASML stock. So, ASML is currently trading at an extremely high valuation compared to its peers. Other semiconductor wafer fab equipment manufacturers like Applied Materials, KLA, Lam Research all have a P/E ratio of around 15, whereas the P/E ratio of ASML sits at 35. Keep in mind that these other companies all have their different niches, with most of them having a near monopoly-like status in their specific niche. For example, Applied Material have near monopoly status in physical vapor deposition and chemical mechanical polishing. So a higher P ratio for ASML means that there's lesser room for error for ASML in their execution. What this means is that a miss in delivery, for example, would hurt ASML a lot more than its competitors. So jumping on to our next point, ASML has seen a sharp decrease in their net bookings going all the way back to 2022. While this may not be a cause of concern now, I will keep my eyes peeled for their net bookings over the subsequent quarters. If the net bookings remain at this level or perhaps even decrease further, it could mean a prolonged downturn for the semiconductor industry, and it's definitely something you should look out for. So the last and probably most important point is that there is still competition in the photolithography space. ASML's monopoly is only in the EUV space. However, more than 40% of their revenue still comes from DUV. So in the DUV space, there are competition, namely Canon and Nikon with their own product offerings. Jumping back to the EUV space, although ASML is currently the only provider of EUV machines, Canon is currently innovating and came out with a completely new technology for lithography, the nano imprint lithography. Although there are still issues with Canon's technology that they still need to overcome, but customers will be very likely willing to try out Canon's new technology due to cost saving. Remember, ASML's EUV machines are extremely expensive, and if another company is able to provide an alternative technology to EUV, ASML will see their moat being breached and their profit margin will likely shrink. So overall, that's all from me. There are some risks that could materialize for ASML in near future, but nothing of major concern right now. The only issue that I see is ASML's valuation, as they have gone up a fair bit since 2022, and I'll be waiting for it to drop before buying. Thank you for staying all the way to the end of this video, and I hope to see you in the next one. Goodbye.